in a nutshell, virtual CFO service is designed for small businesses that are large enough that they need a CFO, but small not to be able to hire a CFO. A typical CFO and CPA, MBA type person will cost $100,000, if not more, to any business. There are a lot of small businesses who cannot afford $100,000 of finance accounting bill, and even then, even when you have the CFO, you have to go out to get the taxes done by somebody else, because the tax accountant is going to be different than the CFO, who is in-house accountant, or the auditor has to be different than the in-house accountant. Somebody, a third party, has to review your books. You cannot be reviewing your own books. So the design here is, we at Sai CPA Services have 53 accountants right now. With 53 accountants, we have 12 CPAs. So we provide this virtual, please come, please have a seat. We provide this virtual CFO service here. We are a part-time person, a CPA, MBA type of person is assigned to your business. Full-time, we'll discuss what services a virtual CFO typically provides. We'll customize the service based on your business, what you need in your business. We'll decide how many hours it will take weekly. And this person, you have the cell number, you have the WhatsApp number. This person is a CFO for your business for that much duration, doing what needs to be done for your business. So as a small business owner, when we are the CEO, when we are running the business, we are all good in what we do. We are good doctors, we are good IT people, but a lot of times we are not as good business people. We don't really collect money. We believe I did the job, so I'm a good guy, I pay everybody, so everybody should pay me. But when it comes to the business, unless you're really on top of your collection, unless you're really collecting the money, people wouldn't pay you unless you really make them pay. There are all sorts of people in the market. Not everybody is as nice as you assume they are. So in this model, we are creating a situation, we are putting one person full-time in your business. You decide how many hours. You don't have to be paying for 40 hours. You can't afford 40 hours. You don't need $100,000 person. Say, I need only 5 hours. Sure, 5 hours it is. You have an MBA, CPA, a CFO with complete guidelines. This is what I need. I need the cash flow service. I want to make sure my collection is right. I want to make sure nobody is trying to sue me because I did not pay their bills. So we decide the service. We will go through each service. So this is what we have at Sai CPA Services. 25 years of professional experience. I was 4 years computer graduate. Then I did MBA in finance at NYU. Then I did CPA, wealth planning licenses, insurance licenses. I mean, I kid around, but I have more degrees and licenses that I can fit on a business card. So I had to get the folded card to make sure I can fit everything over there. But when it comes to the small CPA firm, we are not E&Y, Arthur Anderson, KPMG, but when it comes to a small CPA firm, most companies you will find one-man army, one CPA, one bookkeeper, one CPA, couple of bookkeepers. You don't really see many ethnic small CPA firm that can claim we have 53 accountants, 12 CPAs, 3 locations. That's not common. Even in the private CPA market, that's very, very unique by itself, that we have enough people to take care of all the business needs, that whatever a small business need in terms of accounting and finance. And yet we are small enough, all the cards that you see, all the advertisement that you see, they all have my cell phone number over there. So we are happy to pick up your phone. When it comes to the KPMG or E&Y, you have the 800 number, dial 1 for dial 2 and dial 2 to dial number 3. Meaning you get into a line and every time you have a new person picking up your phone and you don't know where you're going. So we provide the touch of a small business and the strength of a large business. We have all sorts of clients, technology firms, restaurants, distribution centers, trucking companies, wholesale store, retail stores, a lot of medical offices, a lot of non-for-profit companies. So this is, in a nutshell, a typical CPA accounting firm does. Today's presentation is only about this section. Next month, and we typically do it in summer, as I said, so next month we'll be talking about the audit service, typically last Wednesday of every month in summer. So today's presentation is about virtual CFO service. So, and all this presentation is given to you so you can make notes, you can understand. If there is any question, that you did not ask, that you don't want to ask right now, you can ask me separately. You have my email, you have my cell number. So we do the business startup, LLC, partnership, proprietorship, C Corp, S Corp. We'll decide what kind of business makes sense for you, what the business structure looks like, what are the tax implications, pros and cons. We do the business startup here, accounting and bookkeeping, including the reconciliation of the financial statements, bank reconciliation, creating the P&L, balance sheet, cash flow statement. This is here. The virtual CFO service is what we are going to be talking about, and what a virtual CFO typically does. Audit services, a lot of time people confuses audit services with IRS audit and the state audit. They are not the real audit. IRS audits are defensive audit, meaning IRS has a question, they are sending a letter, and you're defending. A real audit is needed when you have more than $5 million of loan, or if your company is more than $50 million in revenue. Then by law, you have to have the financial statements audited by an independent CPA. That's where we do a lot of object evaluation, risk assessment, internal control audits. So that's the section we'll be covering next month. Of course, any CPA will do individual taxes, business taxes, sales tax, payroll tax, liquor tax, tire tax, all those sort of comes part and parcel. And of IRS problem and representations, tax audit, late filing, offer in compromise, penalty abatement, all in one shop. So what we are selling essentially is a one-stop shop. You have a letter, send it to AJ, and you're done. It's taken care of. You don't have to go. Yes, please, of course.
You know this, we are filing taxes on time,
Of course.
but that is not represented in IRS.
It happens sometimes.
Yeah, we are not validating whether IRS got all the information or not. We are getting it to know only later point of time.
It happens.
Is there any way we can do a confirmation
Yes,
with the
of course.
IRS to say, hey, we filed the taxes, all the taxes documents are with you right now, so that we don't have to hit that
Makes
hump
sense. That's
or
a great
whatever
question.
it is.
I'll introduce Bhaskar first. Bhaskar and his wife owns several Maneki stores. Maneki is a auto shop, so they own 7 or 8 Maneki stores.
Yeah, 6 Maneki outlets
and few
Pro
flooring stores.
Source wholesale.
Pro Source is another brand for flooring,
Kitchen and bath.
kitchen and bath flooring, right?
Kitchen, bath, and flooring.
And
3 of them.
then IT company and few other things. So it's a very, very entrepreneur. Yes, absolutely. There is a compliance check that you can do on any business,
Okay.
where you can see the payroll reports, the annual report, sales tax report, any sort of compliance. So IRS and state, they offer some sort of compliance that you can check with them,
Okay.
and you can have this.
Can you make it as a periodic check with
Yes.
them?
Yes, you can.
Okay.
No, well, no, I'm sorry. You can't really schedule it automatically. You have to make an effort, go to the IRS office,
Oh, okay. It's an individual representation.
individual for each company separately, with proper power of attorney. So this is what we want to focus today: virtual CFO service. And as I said, the concept is we are assigning a CPA, MBA, a CFO to your small business, where your small business does not have to pay the full price tag for this person. The virtual CFO does financial planning and analysis, where you see how much expense going to take. I have 2 projects. Which one should I be taking? Or can I afford to take both? So the financial planning and analysis is part of the virtual CFO service. The virtual CFO will help you do budgeting and forecasting. For 12 months, how much cash would I need? How much money will I be making? How much money can I take out of this process? And you made the budget once, and let's say that things are not going as well, or things are going much better than you expected, then the CFO can help you redo the forecast every quarter. They can do the next 12 months forecast. So you not only have the budget, you have the forecast. The CFO can help you do the cash flow management. How much cash is coming in? How much cash you have to bring in? A lot of times, especially the IT companies, you have to pay the salaries first. So the employees wants to be paid every 15 days. The client pays 30 days after you send the invoice out. So there is a 2 months of cash flow that's needed in any IT. I mean, please come, have a seat. So cash flow management is also part of virtual CFO service. A lot of times you will need loan, financial relationship with the bank. You will need line of credit, you will need loans, you will need several business loans, personal loans. All that relationship has to be managed by somebody. As a small business owner, you don't know when the bank is saying your covenants are not matching. But what is covenant? If you have somebody who understands these things, a CFO, they will manage this whole relationship on your behalf with the bank. So especially when you have investors, they say if you're trying to open a restaurant or a big shop, you need $5 million and you have 3 partners. So you have 20 partners in that. So all these investors are expecting some sort of reporting at the end of the quarter. At the end of, am I profitable? I gave you this much money. Am I going to get it back? When am I going to get it back? What interest rate can I expect? Bill payment and AR collection is very important as well. AR collection, a lot of small business misses that part. They are struggling with the cash, not knowing that their account receivable is not collected. For a small business, like for the doctor's office, where the money is coming through credit card, it may not be that big of an issue. But a lot of time it comes first. But for a lot of people like IT companies and for people who are invoicing the client, they have to wait for 30 days, 60 days, unless you keep reminding them. A lot of times this does not work. Financial reporting includes the P&L, balance sheet, and cash flow statement. So all that financial reporting, it goes hand in hand with the bank, it goes hand in hand with the board reporting, investor reporting. Borrowing base is an instrument. Borrowing base is an instrument that's used for ABR. When you have asset-based lending, meaning when the bank is lending you the money based on the asset, based on your inventory, based on your AR. That's when the bank is requesting a borrowing base. It could be every month, it could be every 3 months, it could be as much as every week. So based on the inventory has to be counted, your AR has to be factored. So the rule is bank will give you 60% line of credit, whatever your inventory is. Bank will give you up to 80% of your account receivable as a line of credit. But you have to submit this report every month. And that's called borrowing base. Covenant calculation includes the ROI, if your assets are enough, if you have the enough cash flow in the enough cash in the bank. So there are multiple services. The idea here is virtual CFO is not just about budgeting, forecasting, cash flow, bill payment. There are a lot of things that a virtual CFO does, and not everything is going to be applicable to every business. So you decide based on your business what makes most sense for your business, and then we sort of customize the service. In your case, this is what you need, A, B, and C. This is how many hours it will take.
Do you have a matrix of how much it will cost for each services?
Yes. Well, at the end of the day, it depends on the business size, depends on the frequency, it depends on how many hours. They say the CPA, the MBA has to be paid for 40 hours. Depending on if I can use it for 5 clients or 10 clients, then we'll decide how much price is going to be, how much cost is going to be.
Hey, Jake, can I ask something?
Of course.
So with, when you're talking about financial reporting, one of the things you talked about was P&L. When you're talking about budgeting, are there, I guess, just a little bit about the mechanics, other than looking at the P&L statements and getting a sense of, where the money's going to and what's left over at the end, what are the kind of services involved in budgeting and forecasting?
Absolutely. So these are the benefits, but I'll come back to the benefit. I'll come back to FP&A. Let's talk about budgeting. So budgeting is a process where we figure out how much money is needed for 12 months, how much revenue you are expecting, how much the expense going to be, what's the bottom line going to be. And then every month you compare, this is what I was thinking, this is what I was planning, this is what the actual turned out to be. Where I'm lacking, is my payroll too high? Is my SG&A too high? What expenses are higher? Am I getting the same lead that I was expecting in terms of marketing? And then after 3 months, you say, well, this is where I'm going. This is what I was expecting. Can you do the forecast for the next 9 months, next 12 months? So budgeting is a process where you see, based on what I know, this is where I want to reach. Then every month you track, this is where I want it to go, but this is where how it's lagging behind or going better. So you can change the target as a part of the forecasting process. And then you will never have to find yourself in a situation, if you have the right budgeting and forecasting, that I need $200,000 tomorrow, otherwise I cannot pay the salary. Because you have already budgeted for it. You have already forecasted it, how much cash you need and where the cash is going to come from. And we'll talk about where the cash can come from when we do the cash flow management service. But just to discuss the budgeting section of it, so budgeting will help you sort of not worry about where the business is going. And the CFO is giving you this right insight. This was the budget, this is the actual, these are the differences, these are the variance, and this is the forecast looks like. If you don't like it, let's sit together, discuss it, fix it.
And to clarify again, because I think you said this in the beginning, that CFO is a particular professional on your staff or that you contract with who would be working with me. I'm not working with different people all the
So
time.
CFO is somebody who is assigned by the company. The benefit that a small business get is if you hire somebody directly, that person can leave. If our person leaves, we have 12 CFOs like that, so you don't have to worry about this person leaving. The transition will be smooth for you, but you will have one person assigned to you that you will be dealing with. But if, let's say hypothetically, this person is not good with IRS audit, but this person has 53 accountants that he has access to, that she has access to, where she can reach out whatever expertise this person does not have. So they come with the resources of 53 accountants, and yet you have one person assigned to you.
Understood.
So I'll go back to the benefits and then we'll come back to, so the idea over here is a virtual CFO includes a lot of services. Reduced cost because you don't have to pay full-time CFO person, budget control that we were just discussing, risk management, so you will never really find yourself that I need 200,000, doesn't matter what rate I have to get me 15%, get me 20%, but I need the money tomorrow. So you can manage the risk. You have flexibility and scalability. Today you need 4 hours, tomorrow you say, you know what, can you add bill payment as well? You don't really have to go out of your way. The same person, same team can scale the service for you. Technological integration. Up until yesterday, you were doing it on papers, Excel. Now you want to do QuickBooks. The same person, this person is dealing with a lot of businesses. They can help you find the right system. And of course, the increased cash flow, because now your bills are going on time. You are not chasing the customer. It's professionally done. Somebody else is doing it. So it becomes a very well integrated service. So let's talk about quickly financial planning and analysis. And the idea here is, these are the services that I want to highlight, and I'll go through it quickly. If you have any question on any service, you just ask me. But financial planning and analysis, budgeting, cash flow, bank relationship, bank loans, investor board reporting, bill payment, all these services. And there's I have a brief slide on every service. I'll walk you fast, but if you have any questions, just interrupt. So financial planning and analysis is all about planning. I'm trying to open 2 shops or 2 new restaurants. Can I afford to? How much cash do I need? Should I go with one? Which one should I go with? This is all about financial planning and analysis. All about financial actions, decision making based on what you have. A lot of people don't understand. I come across a lot of small businesses. We give them the P&L. Okay, looks good, looks good, looks good. But do they really understand the P&L? Do they really understand how much assets they have? What liability they have? The only thing they understand is, do I have enough money in the bank? Even if it's coming through the loan. So this financial planning and analysis can help a small business make the right decision, manage their risk. Capital allocation, I have this much money. I got the EIDL loan. What should I be doing with this money? Strategic planning, cost control, and best performance monitoring. How am I doing? As we were discussing with the budgeting and forecasting. So budgeting and forecasting we touched upon. So let's look at the benefits of budgeting and forecasting. Of course, you can manage your cash flow. Target for growth. If you are not doing as well as you were expecting, you are comparing your actuals with the budget. Financial problem. If you think this is not going the way you want, beforehand you will know in advance as what you can do now to fix it. You can monitor the performance because you're always comparing your budget, your forecast with the actuals, and improve focus based on the facts. It's not just, this is what I want. You have an action plan around it. Cash flow management is most important when it comes to a small business. We all understand, a lot of small business understand operating side of the cash flow. They know how much money is coming in general, how much money is going out. That's what they understand. I buy it for $10, I sell it for $12, I should not be losing it. This is the operating side of the cash flow. They don't understand there is an investing side of it. They took the EIDL loan, they took a bad loan, from bills to credit. They are paying 20% interest on that loan, 15% interest on that loan. That's also going out of the cash flow. So all the investing activities that they have, do they have to bring their own money? Should they take a home equity line of credit? Should they be taking a bank loan? How long the bank loan is going to take? Bank loan can take as long as 3 months when it goes through the underwriting process. You can go through the private loan, you can go through the bad loan that can happen in 3 days. So all that, and so a lot of small businesses understand the operating because they are good in what they do. They don't understand the investing side of it and the finance side of it. A good CFO can help you decide all these type of cash flow, where is the money coming, and if you run out of the money, you will know 6 months in advance as where should the money be coming from. Do you have enough money? If you don't have enough money, we have to go to a bank. So instead of going to the bank in the last minute that I need the money tomorrow, if you tell us 6 months in advance, we can go to the right bank and find the money for you. The lending process will take 3 months. Improved credit rating because you have enough cash. You can pay all the bills on time. Cash flow budgeting, investment opportunity. You have $200,000 sitting in the bank. You don't know what to do. You are too scared if you are going to have enough money or not. But if you have the proper budgeting, forecasting, if you have the cash flow management, you know your cash flow positive every month. You don't have to keep 200,000 in the bank. You can use this money to invest somewhere, so you can make more interest or better results. So you have investment opportunities over there. Board and investor reporting typically applies when you have multiple investors, when you have partners, or when you have a board in a company. So everybody who is investing money or the board, they have different objective behind the money. When you have investor, they're typically looking for performance metrics. How is the business doing? Is the business losing money or making money? If as long as the business is making money, they know they'll get the money back. So they're more concerned about the performance metrics. So you have to have sort of quarterly, monthly, yearly, at a frequent interval, some sort of updates have to be sent out to all the investors. A relationship has to be managed with all the investors, and there has to be some sort of general meeting. They want to hear from the CPA, from a third party, the business is doing well, this is the metrics, this is the money that they made, and your money will be coming back soon. The board has a different objective. Board is an internal team. They are more concerned about the financial report, the operational side of it, as opposed to the investor. So everybody who comes in the business, board, investor, they have different objective, looking for different type of reports. So we'll be helping them make all those type of reports. When you have somebody, a CFO in your team, taking care of these reporting, you have better communication with the team, efficient communication, you have some accountability. It's not that I gave you the money and you don't pick up my phone anymore. Every month, every quarter, you have certain reports coming to you. You know where the business is going, you know business is profitable. It creates better confidence for the investors, and they're happy to bring more money into your business. Bill payment and AR collection, we do for a lot of clients. More bill payment than AR collection. So just because you have to hire somebody full-time over there, we have accountants anyway. So this accountant part-time can help you do all the bill payments. You approve, we pay. Everything gets approved by the client, or at a certain interval. Say for example, rent, you don't have to approve rent every month. You approve it once, you pay it on a certain date. You decide these type of bills needs to be approved, these type of bills do not need to be approved. Say internet, Comcast, as long as it's in the same range, it doesn't need to be approved. So certain bills we can just pay without your approval as long as we have the right guidelines, and certain bills will send you this is the bill, this is what we're expecting every Friday. You say pay this, hold on to this, pay this, and the bills are paid. And somebody is managing the cash flow on your behalf. The money has to be there in the bank before the bills are paid. You don't want to be paying the bills and find out there was no money in the bank. So that whole thing is done behind the scene. Same thing with the AR collection. This professional and respectful approach, because you are not chasing them down. Somebody else is sending a polite email to them every week, every 2 weeks. We decide the frequency and we make the call, so we can just get the bill collection done. It ensures a timely payment when it comes to bill payment. So nobody is trying to put a lien against you, or your credit score is not going down. We are managing the working capital. Enough money is there in the bank to cover the next 2 weeks, next 4 weeks bill, because we know how much bill is going to be there. We have been paying the bills, so we'll let you know up front. Last one we paid $20,000 worth of bill. Now I have only 5,000 in the bank. We have to work. We have to do something. Again, financial reporting at a high level. We have three types of report: P&L, balance sheet, and cash flow. Profit and loss statement, where we look at the operating activities mainly. Balance sheet, where we look at how much assets the business has, what liability, what loans the business has, and cash flow, where we see how much cash is being generated by the business. This service helps you make the right decision. Especially the profit and loss statement is more of a decision-making tool. Balance sheet is more of a loan tool. Higher the asset, higher your lendability, meaning more money you can get from the bank. More liability you have on the balance sheet, banks will hesitate in giving you the money. And cash flow management is very important for any small business. This also helps you build financial relationship with the bank. When you are dealing with the bank, as a business owner, the bank is looking at you suspiciously. Bank feels that you can be making up the numbers because this is your business and you don't understand the financials anyway. So when you have a third party, a CFO, virtual CFO who works for Sai CPA Services, for example, representing you to the bank, there is an inherent trust that comes in the picture. Or this person has checked it. Or he's a CPA and this person is saying that this is the right goal. So this person is checking. So it helps you. And a lot of these loan application, the documentation is cumbersome. There are so much documents. If you try to fill it up yourself, the probability is higher that you will end up making a mistake here and there. And the loan, if not denied, will take forever. Will take much longer. We'll do the covenant computation as what's the ROI on the loan, what's the how much cash flow we need to keep. And hence financial decision making. These are the benefits of building financial relationship with the bank. So you will know 6 months in advance if your business is going to need cash. If your business is going to need money, you know well in advance. So you can build that relationship, get that money well in advance so you're not struggling at the last minute. So why choose us? As I said in the beginning, as a CFO, it's very difficult. It's not easy to find the right CFO. The CFO can come in, work with you for 6 months, 5 months, then leave your company. And then you find yourself back to square one. What do I do now? Do I have to hire another person, train that person? We are here dealing with a virtual CFO company. We have 12 CFOs right now, 12 CPAs who works as a CFO, virtual CFO, 53 accountants. This person not only has access to 53 accountants, this person can easily be replaced by somebody. If this person leaves, you don't have to worry about it. The company is responsible to replace and have the proper transition done. We can do the cash flow management, all the service, and it's highly customized, meaning you don't really, it's not one of those things that you have to hire all of it, or you have to pay us $10,000 a month, otherwise you cannot get it. Whatever you want, however you want, depending on your business. I thank you for listening to me. I know it was a little long, took some time, but I appreciate you coming over here, and I thank you. I'll take any question. Any question? Yes, please.
Yeah, I have a couple, actually. So, one of the things we were just talking about earlier is we're in mental health. So we're not trained to be, I'm not trained to be a business person. You all know that. Sometimes I don't know what I don't know.
Of course.
And so I guess what is the process by, I guess I want to get a sense of what's important for me is to be able to meet with someone who's going to tell me that I need to make a change, or I need to look at making a change when I didn't even know there was a problem to begin with. So how does that work? I mean, I'm assuming that's built into the service in some way.
So let's take an example. So if we do budgeting service, right now you're not doing any budget, you're not making any forecast, so you don't really know what you don't know. But hypothetically, if you were doing the budgeting service and the budget is compared with actual every month, and just hypothetically, not that it's the real case, let's say the actuals are coming out to be much lower than the budget, then you will know this person, the virtual CFO, will tell you, hey, the actuals are much lower than what you were expecting. If this is the rate you keep keeping the employees, in 6 months, in 9 months, you will run out of cash. In 3 months, you will run out of cash. So this person will alert you with any foreseeable situation that this person can see. Take another example. Let's say you have a loan, EIDL loan is due next year, balloon payment. You're not thinking about it because the money is there. But if you have a virtual CFO, they will tell you this loan needs to be refinanced, so they can start the process 3 months, 4 months, 6 months in advance, so they can do the shopping around, go to 3 banks for you, see where you can get the best rate, and before the time comes, they can try the refinancing for you. So this person, depending on what you're getting into, let's say bill payment, sometimes we miss the bill or we don't really know. How could I miss the rent? Because you were not thinking about it. Out of mind, out of sight, right? But if you have somebody looking at all these parameters for you, and I want to make sure my gross margin is 20%, my net margin is 10%, I want to make sure that I'm making this much money. If I'm not collecting $100,000 a month, please alert me. So you can set up certain parameters to alert you in advance.
Okay, but again, I mean, related to that, just a little bit of a twist, this idea of where I'm, let's say I'm using some kind of a service separate from CFO, just another services in terms of working, let's say, just as an example, so we use electronic medical record systems. And maybe there's certain aspects of this system in particular that that don't work so well for us. And there are other systems that would work more effectively. Now, the CFO might know specifically about EMS systems, but to be able to say to me, you could save money if you did it this way instead of this way, or use a different kind of a service, this is available, that sort of thing that I would never even know.
Yes.
I mean, that's sort of...
It's an industry specific thing, but you can have the CFO search the system. If I were to say the CFO would know every industry,
of course,
every system, it's practically not possible. But you can assign this thing. I'm struggling over here. I think it's costing me too much, or it's not as effective as I would want it to be. Take an example of credit card processing. So you initially sign up, it was 1.9% on an average. Now it's suddenly 2.3%. So you can have this person shop around a lot of systems to see what's the best deal and why is it increasing, which you may not have time and energy to do it yourself.
Okay. We do one other follow-up question.
Of course,
that's okay.
Please.
So, and I'm thinking, I can't imagine that other people don't think this,
Please.
and that is, my business is very different than other people's business. So, I'm very different than someone who has car parts or someone who owns a liquor store. And I think the difficulty in saying, well, I'm going to hire the CFO and kind of hand all this stuff over to this person to manage it is, how much does that person really know my business, and that I can allow that to happen, because there are some very subtle differences between these different businesses. And so how does that work?
Well, you're 100% right. Even in the doctor's office, forget about the liquor store or the auto shop. 2 doctor's offices are not same. Everybody is running the office differently. So we have people who are doing just the taxes. We have people doing only the payroll. So the whole company is divided by department. So you bring in the expertise of service as opposed to just an industry only. So in the beginning, you have to work with this person based on the service you're expecting. This is what I'm expecting, this is how you do it. That's why it's important, it's better to have a virtual CFO than your full-time CFO. When the full-time CFO leaves, that knowledge that you transferred will go with that person.
Mm-hmm.
With the virtual CFO, that knowledge is staying within the company. They will make certain documents, certain policies, certain processes that they will share with you. This is what I understood, this is what I'm supposed to be doing. So anybody can replace that person if this person happens to go.
So when I'm working with one of your CFOs and they're working with me, they keep some kind of a file or record on the kinds of things that they're doing that you have in your organization. So if they leave, it's all there already for the next person.
How would we be judging their performance? And if this person happens to leave, you don't care. AJ, I hired you. I hired Sai CPA Services. I want my things to be continued. So there will be policies, processes, check marks, some sort of performance metric. Is this done? Are you late? And this process, and there is always a backup. They say this person is not leaving the company, but just out on vacation for 3 days. Then what? Can we stop paying your bills for 3 days?
Right.
So there's always a backup of this CFO who is working with this person.
Okay.
So it's a duplicate structure for everybody. I'll introduce Dr. Shukla, Dr. Nimisha Shukla.
Hello.
Dr. Shukla is a pediatrics and owns Doom FM and owns several buildings and a lot of the businesses. And the president of IAWEA, Indian American Women Entrepreneurs Association.
Very good.
Yes. I got it all right.
Nice meeting you, ma'am.
Any other questions that we have? Anything else that I can elaborate on?
Cost of this.
Yes, absolutely. We touched upon it. So there are several services a virtual CFO provides. So these are the 8 services that we discussed briefly. So not every business needs all the 8 services. Not every business needs the financial planning analysis, cash flow, AR collection or bill payment. Let's say, for example, the doctor's office, they don't need to worry about the AR collection as such. So we will try to customize this service based on what you truly need. And we'll try to create some parameters, let's say bill payment, when the bill needs to be paid, how many bills needs to be paid. We'll try to customize a package. Out of these services, you only need 2 services. You don't need 8 services. And then we'll say how much time it can take. And that's how the services are provided. Even let's say if you have just one service, bill payment, for one business, it could be 500 bills in a month. For other business, there are only 15 bills in a month, depending on the type of business you have. So it wouldn't be fair to have the same price for each service as such. At the end of the day, you have a dedicated person, an MBA, CPA, experienced person who has access to 53 accountants, who has a backup just in case if this person is not available at your fingertips. Where you have the cell phone, where you have the WhatsApp number, where you have the email address, anything you need, you text, call, WhatsApp. This is what I was saying. And this person will get it done for you. So go ahead, please.
How is any CFO assigned to any particular business that comes for services? How does that happen? Like what determines what determines how do you match up any particular CFO with a business that comes?
It has to be based on the experience, based on the, let's say, for example, if you are looking with the more of a bank relationship or the borrowing based computation, that expertise is slightly different than if you are looking for bill payment service. So based on what you have, we'll try to find the person who has done it or who is already doing it for other clients. So there are few CFOs who are familiar with the banks, and there's not too many banks in the market. I mean, there are 5, 6, 10 banks. So in most cases, we are already working with the person that you want to work with. If you are working with M&T, we have 5 clients working with M&T. We have large line of credit. One of our clients has $38 million for line of credit. So we already know those people that you want to be working with. So it's easier for us, better for you to have the same person assigned to your business, if that's the situation you are in. So based on the situation, based on the service that you need, at the end of the day, it's in our best interest to make it look good, to make it successful. So the person who really knows what you're doing, that's the person assigned to you. And you always have my number as a backup anyway.
Mm-hmm.
And remember, all these 53 people reports into me.
So this budgeting and forecasting with the growth, right? How do you tie that when there is only a virtual CFO?
Yes.
How can their heart and soul be in there for the growth of the business when they are?
Absolutely. That's a great question. So we were just talking about the budgeting and forecasting here. So the question is twofold here. So first question is, how do we do the budgeting and forecasting? And let's parse out the soul. How do you bring the soul of the CFO into your business? So yeah.
Because, I do this budgeting forecasting myself,
Of course.
but the CFO kind of is there to drive it, right? So if once we decided that we want 10% growth this year, then the whole team,
Has to work together.
Yes, and if it is somebody
make it.
virtual, how?
Well, it all depends on the personality also. It's not that if you hire somebody full time, first it's going to be too expensive, $100,000, as opposed to somebody who starts charging you a few $1,000s for doing what they're doing. Second, when it comes to driving the result, it's not about full time or virtual. It's more about the personality. You have certain criteria. This is what I expect. You tell me what you did. If you are stuck, let's have a meeting together. It's less about the virtual or non-virtual. Virtual CFO is a service where we are providing a qualified person for a small business at a fraction of rate. And budgeting is essentially, I mean, you can do the budgeting yourself, but when you have a third party who is doing hundreds of budgets, they can give you some extra insight that maybe we should look into this. Maybe 10% is too aggressive in this case, or too low in this case. Maybe we should target 12%. So you have a qualified person giving you another perspective in the situation. Anything else? Anybody else? Any question? So I'll be around. Let's have some dinner, and then if there is any other question, I'll be happy to answer it for you.
Thank you.
Thank you.
Thank you for coming. Please, let's have something. Please.
One more question. Does the CFO handle all the like IRS issues or any
Absolutely.
tax issues?
Absolutely. CFO is somebody who is working for you, your right hand, without the full salary. You tell them. Let's say the CFO does not handle the audit, or CFO is not qualified to represent the IRS. It's his job, her job, to get it done. To find somebody, he's representing you, your clone, your copy at a fraction of price. Right now, you are trying to go get everything yourself. So just for the finance part, you have somebody who will take care of it.
Will that CFO be placed here or outside the country?
Here in
In
US,
US.
and a lot of cases at your office. It doesn't work if it's outside the country. You will have it here, full-time person. But a lot of times this person will visit your office. Unless they are working with your business, they wouldn't understand your business as well.
Right.
So a lot of times we have the CFO visiting the office once a week. Depending on the size of the client, depending on how big is the assignment, they frequently visit the office location as well.
And will they give us the industry norms, like say
Of course,
inside the
just
healthcare?
because they have, say you only know about one office,
Yeah.
we have 1,200 small businesses. A lot of doctors.
sitting on the
Right now, after the 10 people, we have 3 doctors. After 10 people. So you get to see a lot of statistics. This business is making this much gross profit, this much net profit. Your business is making this.